I'm Don Creech.
And I'm Terry Sykes, and welcome to the Investor Resources Podcast.
So the one thing that we do know about money in general is that money loves to be cared for. It
Yes, very
it go
well. Yes,
uh, whether it's your home budget or an investment or a company making decisions, money wants to be well treated. When it's not well treated, money leaves at all levels. And one of the things that has been on a back burner issue in the capital market, the investment market, finance market, is how long will the New York Stock Exchange be New York?
right. And
And
that's been on, like you said, that's been in the works for a while. For a while, we've mentioned a couple of times on our podcast here. The New York Stock Exchange is basically a marketing tool right now. The building itself, it's iconic. Everyone knows what it looks like on the inside and the outside. But if you want to have a business meeting or a retirement party at the New York Stock Exchange on the
or a
floor,
wedding,
a wedding, it's available. You can come on in, rent some space, and have your party at the New York Stock Exchange because there's not much else going on there. It's the New York Stock Exchange, of course, like everything else, largely electronic. There's no more paper trading going on. And there's only about 3% of the trades globally that are registered with the New York Stock Exchange that actually go through New York. There's not a lot going on there.
and they have an increasing amount of competition.
Correct.
Notwithstanding the competition that's coming from the crypto world, which has argued successfully in recent days that they're not a security and should not be regulated by the SEC. But Texas loves money and they love business. And that Texas, a couple of years in the making, has established the Texas Stock Exchange. And with that, the New York Stock Exchange has announced we should be in Texas. If we're going to get competition down there, we better show up.
Right. And by the way, the Texas Stock Exchange for initial clients has BlackRock, the world's largest money manager, Citadel, massive, and Charles Schwab, who we use to custody our clients' money. They're all in at the beginning. And the New York Stock Exchange is like, okay, it's one of the oldest sayings in finance: capital flows to where it's treated best. And apparently, Texas is way better treating of capital than New York, and so money's flowing there. And it looks like that's where the New York Stock Exchange is going to end up also.
And it's not just Texas is treating money better than New York. They're treating it better than California. They're treating it better than Delaware. They're treating it better than Michigan. Many companies have moved. The one that comes off the top of my mind is Elon Musk has moved his operations out of California. And it's a function of look at the regulations, the pain in the neck kind of supervision that they want to exercise over management decisions. They're saying this makes no sense. Not only are we being penalized with excessive regulation, but with excessive taxation that's targeted on us specifically. And when Delaware used to attract a lot of business because it was viewed favorably for registering your corporation, your
Correct.
national corporation, that's no longer the case. The courts are basically taking an anti-business perspective as cases come to them dealing with major corporations. Corporations say this doesn't make any sense. We've been dealing with this issue for 100 years. And now you're going to change your mind and say we can't operate in the way we've done for so long. Let's go someplace where they like us. Florida's attracted business. Texas has attracted business. And the fact that they initiated the Texas Stock Exchange to make it easier to do business down there is going to attract more money. So basically, you have businesses rotating to politically favorable environments where they can operate profitably in an easier structure or at least an easier environment from a legal standpoint.
And the New York Stock Exchange is basically, this is a momentum play for them. They're just following the money. Texas has the most New York Stock Exchange listings, more than any other state. $3.7 trillion of market capital is already in Texas. That's where business is happening right now. So that's where all the companies are going. Why wouldn't the New York Stock Exchange follow? And that branding and the history of the New York Stock Exchange, where it all began here, is all still there. But they're going to take it with them and move it all to Texas because the business environment favors it so much more. And when you're doing business on that scale, even little things make an enormous difference in profitability and the ease at which you can both maintain and expand and change your operation. And when Texas is saying, well, we're going to let you pretty much do what you want here, instead of New York, California, who are saying, oh no, we've got a laundry list of things that you have to comply with before we'll even talk to you about doing anything different than you're doing right now. It becomes obvious we've got to move, and it's going to happen. And I don't think it matters how long historical ties have been in place or how famous the relationship is. And it doesn't get much more famous than the New York Stock Exchange.
It's going to
It's still going to change.
it's the whole shift of capital is going to change political orientation. When you
Sure.
think of the New York Stock Exchange leaving, they're kind of late to the game.
Correct.
Major brokerage firms have already been
Already
leaving
gone.
since COVID. They're
Yeah.
saying we're not going to put up with this anymore, and it's been easy for them just to move down the seaboard to Florida or points in between that have a more favorable jurisdictional view of businesses operating within their states. I mean, the
Correct.
southern states have attracted car companies for years, for decades now. Automobiles have been moving over there. Boeing left Seattle production and moved it to the East Coast. And it was over political issues here in the state of Washington. We turn around and basically this is a rotation that's going to happen. And as people and businesses leave these states in the north, they're going to lose massive amounts of revenue. And at some point in time, financial crisis will cause a political shift to balance the budget and realign what is real, necessary, and what is absolutely unjustifiable expenses that they continue to want to tax for. Now, the same thing's true with your investment portfolio. And in a recent podcast, we mentioned that money rotates and that the U.S. market at the present time, since President Trump's election, that the U.S. market and the global markets have been significantly disrupted. We've never seen an administration come in so prepared to do business and to change the way business operates in favor of capital. The same thing's going on in portfolios. And as we mentioned in a recent podcast, the decline of the market in actually on the 21st of February, is a big
Right.
drop in the market. But
Right.
relatively speaking, it's a minor deal. It's noise. But what has happened in the process of getting there is that other parts of the capital market are actually outperforming U.S. stocks. And most people are so committed to owning the familiar name that they don't pay attention to where money's being treated better at the moment. So I'm going to put
Correct.
up on the screen here. So got to operate with 5 and what's going on here. We got other things that overlay this. So basically what we look at here is something we look at on a regular basis. This keeps track of where money is flowing, which is when money flows into an asset, prices rise. If nobody wants to own the asset, prices fall because you have to have buyers for prices to go up. So we basically keep track of this on different periods, but this is based on a monthly analysis of what's going on. And over the last month, the strongest asset class has been gold. Well, back in 2011, we told people to get out of gold because gold and emerging markets at that time were reversing their positive trend. And gold took, I think, almost 12 years to break
That's
even,
right.
to go
Right.
down and then come
Yep.
back up. And we're now in the surging stage above that level. Gold's winning. And then what most people are underexposed to are international investments, but they're winning. The easy way to look at this is, where are the green traffic lights? Invest with green traffic lights. That's the way you drive. You want to avoid the things that are the red traffic lights. Running a red traffic light's pretty risky in an
Never a
automobile.
good idea. Never a good idea. And it's
That's
important to remember that they're always in motion. These aren't static. That's why we track these all the time. Gold's not always at the top. Sometimes gold's at the bottom. So you have to stay on top of this. You have to keep watching it. There are significant shifts and they're meaningful where your money should be at any given time. And that's why we track them. That rotation is critical to keeping the probabilities of profitable trades on your side.
So we use a benchmark of First Trust Enhanced Short Maturity Exchange Traded Fund. That's kind of a cash equivalent. And so for simplification, do you own stuff that's doing better than cash? Or do you own things that are doing worse than cash? And what's cash? Cash is break even. I'm not losing any money. How much of your portfolio is structured below cash? We believe that's an important benchmark, and we
Sure.
keep track of that.
Yep.
If you don't have that in your portfolio frame of reference and want to talk about it with us, you can give us a call at the end of our commentary here. There'll be contact information for you to reach out to us in multiple different avenues. But rotation goes on, and it never stops. The market never stops. In fact, the U.S. market recently changed from a 2-day settlement to an overnight settlement. If we go back a decade or so, it was 3 days. You bought a stock, and it would take 3 days before it actually settled in your account. That one broker and another broker could reconcile whether you were selling or buying, and what you sold or bought ended up in the right account. Now with digital activity, it's an overnight function. We don't have to worry about that. And that's that's part of one of the realizations that occurred this week with Elon Musk and the government department of what is Doge? Department of Government Efficiency.
There we go.
We found out that government is operating on 50-year-old computer systems with floppy disk. You're walking around with a cell phone, a smartphone in your hand that has more computing power than the first spacecraft to the moon. And yet the government is using floppy disk. They almost could be using slide rules to do their accounting.
They must make those themselves. Yeah, I don't know where do they get those. Yeah, they must have a manufacturing firm somewhere also, because I don't know where else they're going to buy those. Holy smokes!
So one of the people in the Doge team was interviewed on Fox, and they said, we walked into this department and we said, we want to see your backup system. And they handed them a stack of floppy disks. You've got to be kidding. It's no wonder we have government agencies that can't be audited, that we have Congress that has no idea what the accounting systems are from one department to another, because they've all created them themselves. One of the things that should happen as a benefit of the development of technology and AI is, when Doge is done, there's a high probability we have a single accounting system for government, the federal government, that Congress can look at, instead of waiting months for the OMB, Office of Management and Budget, right, to try and capture paper numbers. And
what a concept, right? What a concept.
Put them on a floppy disk.
Terrifying.
Do we need some catch up in the way government operates? We clearly do. Markets respond
some rotation there. Yeah.
Markets respond to this overnight. If you're actually an active trader, it's instantaneous. In a fraction of a minute, your trades are actually handled and taken care of, and you'll see it in your report the next day. We need government to get closer to today's world of operation instead of 50 years ago. We go back 50 years ago, we did have the IBM PC, which reminds me of IBM, and I forget who the CEO was at the time, but Big Blue, when the PC came out, basically said, whoever wants a computer on their desk?
What a mistake that would be. Yeah.
And now we're walking around with them in our hand. Failed to see opportunity coming through the door. Don't do that. Pay attention. Be willing to rotate. Follow the money. When the money leaves what you own, rotate to what is attracting the money. It's good for your portfolio. You want to contact us, the slide showing up with our contact information. Subscribe. We'll be back with another podcast in a few days. Thanks for staying with us.